created by UNAM and the African Blockchain Institute. I will now share my slides. I hope everybody can hear me well. Is that the case?
Yes, please.
Yes?
Yes.
Perfect. Nice. And everyone can see the slides?
Yes.
Amazing. That's good. Okay. Yeah, so we have a lot of content for today. As Mr. Barbarinde also just mentioned, the topic will be the Great Convergence, how AI, DeFi, and FinTech are rewriting the rules of money. So at the beginning, a few words to myself and about the slides. As you can see, they are packed with a lot of content. I will walk you through step by step, so no worries. And they are packed on purpose, so everyone from the audience has the chance afterwards to refer to the slides, which will be either shared by myself. On the last slide, you will find my email. So feel free to approach me afterwards if you have questions or if you want to have the slides. Or otherwise also Mr. Barbarinde will distribute them. A few words to myself. I'm Christopher Antz, a research associate at the Center for Digital Economics, formerly the Frankfurt School Blockchain Center. And as the two names suggest, the center focuses on new financial emerging technologies, such as blockchain, where our focus was lying for the past years. And now we renamed to Center for Digital Economics to broaden our scope beyond just blockchain and also reflect in our name that we cover topics such as artificial intelligence, quantum computing, etc. My background is in banking. At the time when I did my apprenticeship at the local regional Wiesbadener Volksbank in 2016, 2017, I had my first touch points with blockchain technology and decentralized finance in its very early stages. And since then it became a hobby and then a profession throughout my studies. And now work-wise, I'm mostly focusing on institutional finance, blockchain, and artificial intelligence. Yes. So what we will cover today is setting the stage. You see the roadmap of the lecture here. We will have five, let's say, broader topics for today. We will have a look at the kind of old finance, old rules of money, how our financial system used to be. Let's call it the legacy system in the past years and decades. And then throughout the roadmap, throughout the 5 steps, we will tend more towards the new technologies, fintech, decentralized finance, and artificial intelligence, and how they reshape the financial industry, how they already reshaped them in the past years, how they reshape it today, and what lies ahead of us for the next years. So we will look at their conversions, implications, and challenges that arise from that. And of course, we will also have a close look at the African market and the emerging market perspective, because those technologies combined, fintech, DeFi, AI, blockchain, they will have a big impact anywhere in the world. They already had their impacts, but especially, of course, in the African market, for example, right, or in Latin America, etc. Mr. Barbarinde already mentioned how many people are unbanked in Africa. So there we will see the highest disruption, let's say, right? Yes, so let us start with our first part. One second, sorry, because I have the bar here. Perfect. Now it's good. So setting the stage. how is our legacy financial system actually built, and why does it make sense to adopt blockchain technology, decentralized finance? Why was fintech, 10, 15 years ago so attractive to so many people? And where does artificial intelligence come into play? Because we have, do you see my cursor on the screen? Yes,
Yes,
right?
yes, you can
Perfect,
see it.
perfect, amazing. Yes.
Yeah.
So as you can see, we have in the traditional financial system, we have a lot of
Yes, we can see.
intermediate. Yeah, sorry. Or what was
No, go
that
ahead.
not on purpose? Okay. So as you can see on the top at the left, how traditional finance was built, we have a lot of intermediaries in between. Right, who do the account keeping, custody, and credit. We have intermediaries, regulators, exchanges, and so on, who are all a player within the value chain of the traditional financial industry. And therefore, that creates a lot of friction, and everyone, of course, wants to have their share, right? So that leads to naturally leads to inefficiencies. For example, for cross-border payments, I don't know how many people of you have already experienced that, but if you want to use services like MoneyGram, for example, it can take up to 3 or 5 days. Or if you just do a normal money exchange, if you want to send money from, let's say, Namibia to the US, for example, then even if you do it with the not via MoneyGram, right? But just sending money from an account to an account in the legacy financial system, it can take days. And for services such as MoneyGram, for example, it can cost up to 5 to 7 or 8% of the money that you actually send, right? So those are just a few reasons why the system was ripe for disruption. The technology which decentralized finance, blockchain, and so on gives us is much cheaper, because you can eliminate a lot of those intermediaries, which are actually based on trust, right? So you have to trust that single intermediary, that single bookkeeper, that he keeps the book in the right way, right? If money was sent from A to B and then to C, that single bookkeeper keeps track of that, and you have that single point of trust, but also single point of failure, right? So with the new technologies coming into place, people lost trust in institutions after crisis, for example, also in 2008. So it's not a coincidence that also, let's say, the real first application of the blockchain technology, Bitcoin, was introduced right in the middle of the financial crisis of 2008, right? Also, furthermore, a new generation which grows up with smartphones in their hand when they are 5 years old, for example. So digital natives are used to expect a seamless and on-demand experience, right? Yeah, I would also like to end this slide here with a quote of Mark Zuckerberg, who said, "The biggest risk is not taking any risk in a world that is changing really quickly. The only strategy that is guaranteed to fail is not taking risks." Meaning, it is, as of today, riskier to actually not be open to adopt and try out new technologies and disruptive forces, because the market is changing so quickly that it's actually riskier to stick to the old legacy system. So coming to our second part, we will have a close look at the three disruptors that we will focus on today: fintech, decentralized finance, and artificial intelligence. And yeah, fintech was the first disruptor that came into place, let's say around 2010. And it yeah, used to be the technology that made financial services faster, cheaper, and more user-friendly. And yeah, let's say it's built the groundwork to yeah, then collide with decentralized finance, artificial intelligence, and so on. So what changed in fintech? Payments, definitely. You had instant transfers, for example, digital lending. It was faster and easier for SMEs or for consumers to get credit access. Yeah, you had a whole different banking user experience, right? I mean, having banking access via your personal computer, your laptop, or via a tablet, a smartphone, is definitely something different to instead of walking to a branch. Did someone want to say something? Sorry, I hear a voice here sometimes. I'm happy to take questions afterwards, unless it's very urgent.
No, you can go ahead. People are dropping the questions on the chat, and we'll go ahead.
Okay, perfect. Thanks. Sorry, I didn't see that. Is it okay for all of you if we collect them to go through questions later?
I think so.
Yeah, perfect. Awesome. So we will do that. Nice. So, yes, so we had a whole different user experience, right? Let's give you a short look at the key milestones of fintech. So the first mobile money came into place around the 2000s. You could say also with companies being built, such as PayPal, for example, from Elon Musk and Peter Thiel. Then we had digital wallets, neobanks, which were a huge disruption, definitely in the 2010 years. And then from open banking and APIs, yeah, fintech definitely became a global phenomenon. Yeah, the limitations that still stick to fintech, though, are trust and intermediaries, right? I mean, it's financial technology. We have a lot of advantages from it, but still we rely on trusting that single intermediary, for example, a bank. So we rely on centralized institutions and intermediaries for the core infrastructure that we use. Yeah? So fintech was the first disruptor, but we still relied on the same settlement, on the same rails, and so on. Access barrier remains. So many solutions still require KYC, bank accounts, formal data, which still exclude a large segment of the market. High cross-border costs more or less remained the same, since it was deeply, or fintech is deeply tied to the legacy correspondent banking networks. And yeah, also a lack of transparency. For example, how fees are being calculated, right? To put on an African lens here, to bring the African lens in scope, just a few examples, right? We have M-Pesa, for example, MTC Maris, Flutterwave, Paystack, who are all fintech examples, which gained huge traction, right? I mean, if we look at M-Pesa, for example, 60 million plus active users, over $1 trillion in value transacted as of today, since inception. Large numbers, and I bet every one of you who is from Africa, depending on the market or on the country that you're actually from, probably you have used any of those 4 services or competitors. So we can definitely sum this up here with Africa is not just catching up, but it is helping to build the future of finance, right? I mean, you still need a bank account with the most fintech applications, let's say, but somewhere in the background. But basically, fintech was already disrupting the financial system in a way that you basically can gain access or first touch points just with a smartphone, right? So that's now where DeFi and artificial intelligence come into play. Hmm? Sorry, the slide is not going further right now. I don't know why. Mm-mm-mm. Can everyone still hear me?
Yes. Probably you
Okay,
can zoom back
perfect.
your slides and
So do you still see 2.1, FinTech, the first disruptor?
yes.
Okay,
Yes, we can see it.
okay, thanks. Yeah, sorry to all of you. I don't know what the technical issue is right now, but I can't move forward or backwards actually.
Can you stop
Um,
presenting and represent again?
yeah, I already pushed the escape button. Yeah, wait, that's a good idea. Let's do that. Mm-mm-mm. Yes, perfect. Thanks. That was a good idea. Okay, nice. So then coming to decentralized finance, our second force, which introduces a whole new architecture. So DeFi is an open global financial system built on blockchain technology, where code actually replaces the intermediaries that we just introduced, and users can retain control of their assets. So a few words to what actually is DeFi. So DeFi is short for decentralized finance. It refers to financial services built on public blockchain using smart contracts, which is self-executing code that runs without intermediaries. It's a misconception that smart contracts are actually smart. They're not so smart because it's actually just code being written which executes exactly in the way how it was written, right? So you basically have, for example, the customer, you or me, which then uses a smart contract within the decentralized network instead of going through a central intermediary. Yeah? So core primitives of decentralized finance applications, which are already widely adopted as of today, are the ones that we have here on the middle of the slide. Lending services, borrowing, trading, yield earning, and stable coins. Yeah? So especially the first 4 show a large chunk of what the banking industry actually is about, right? At least if you look at retail customers, right? For institutions, it's a bit different though, but especially for retail customers, I think the first 4 segments here they cover already a lot of what at least for my as a banking customer day-to-day usage brings. So, for example, as lending services, probably a lot of you have already heard from the Aave protocol, which is already there since the early days, since 2017. For borrowing services, we also have Spark, for example. decentralized trading, right? Uniswap with its liquidity pools is huge. Some of you might also have heard of Lido or Yearn Finance. And of course, a very, very big topic of decentralized finance are the stable coins, right? Which is a very clever invention, definitely. Just basically gives a smartphone. This might be, I don't know, from a high inflationary country, for example, from Venezuela, let's say, actually access to a product which is tied to a, let's say, rather stable currency. Which risks and challenges arise from decentralized finance? Of course, crypto markets are highly volatile, which can lead to large losses in short periods of time. Yeah, so one really has to be cautious here. Still, as of today, regulation remains kind of uncertain. I mean, large jurisdictions are already introducing frameworks or have introduced frameworks in the past 2 or 3 years. But still, let's say in large parts of the world, it's still very unregulated, and future rules could impact especially DeFi, for example. Because as we will see later, I will also introduce a few legal frameworks from different jurisdictions to you, such as the MiCA legal framework, which came into place in the European market, and that the MiCA legislation does not really cover DeFi protocols, right? Hex and smart contract risks. So it's nice to eliminate the intermediaries, but if everything is written in code, then of course it is also prone to errors and to exploits, which can lead to loss of funds. And there are numerous examples from the past years where billions have been lost in Hex. For example, through exploits from the famous Lazarus Group, if maybe some of you have heard of them, a hacker group which is closely tied to North Korea, for example. And last but not least, it's very complex as of today, right? So user interface, user experience is still complex, which is the biggest reason probably why blockchain, cryptocurrencies, and especially decentralized finance are not facing mass adoption yet. It's getting there because in the past years, user experience, user interfaces, they already improved a lot. If I compare that to 2017, for example, that was something completely else. And I'm betting if someone was already interested in those topics and was doing something regarding blockchain, cryptocurrencies in 2015 or 2012, the user experience was on a whole another low level kind of, right? And that's getting better day by day because there are so many people actually building in that direction that in the end, I guess, in a few years and in the next decades, we will reach a stage where actually most of the people in the world will use services that are decentralized finance or blockchain related, and the people actually do not really know that they are interacting, for example, let's say with a DeFi protocol, right? Just because it is so user-friendly. So the key takeaway here would be that DeFi reimagines finance by removing the intermediaries and opens access to everyone. And to head to our next slide, to stick to the time, we will look at artificial intelligence, so the intelligence layer. AI is transforming finance by turning data into decisions, automating complex processes, and personalizing financial experiences at a very, very large scale. how is AI being embedded into financial services as of today? For example, for fraud detection and anti-money laundering processes, AI analyzes massive transaction data in real time to detect anomalies and prevent fraud, which leads to reduced losses, higher customer protection, and strengthened trust. Another field where AI comes into place in the financial industry is credit scoring, for example. So AI leverages alternative data to score creditworthiness for the underserved credit-wise. We also see AI applications in robo-advisors and wealth management, or for example, in risk modeling and predictive analytics. It ends up basically what you have as an outcome, for example, is automated reporting. Generating an earnings report, for example, for a company. It is possible nowadays to do that within a few hours instead of spending full working days or even weeks on it, depending on the workforce which worked on such a report, right? I mean, all of you experienced AI chatbots, right, in customer services. For example, 3 days ago, I was booking a table for a restaurant, and even for like a small little restaurant in the local town where I live, not such a big town, there was no human actually picking up the phone that I was corresponding to reserve the table, but it was an AI voice, right? For compliance and regulation, that's another big field, and research and analytics, of course. So AI is not just a tool in finance. AI is everywhere, right? And it is an intelligence layer that makes systems smarter, faster, safer. We will see about that a bit later. Safer, of course, as long as there are no errors or biases, and more human-centered. So it turns data into insight, and insight into impact that you can actually act on. Let's jump right into our third part. So we had a look at fintech, artificial intelligence, and decentralized finance solely. So now we will look at the convergence of the three. First of AI plus fintech, then AI plus DeFi, DeFi plus fintech, and then at the full convergence of all three forces as of today, more or less, or already in the past 3 years. When you combine fintech and AI, financial services become smarter, more adaptive, and more human-centered, meaning you can have hyper-personalized financial products. AI analyzes behavior, preferences, real-time data to actually deliver tailored products and experiences to the customer. So you can actually create the right product, the right offer for that specific customer. Examples would be personalized savings goals, custom credit cards, spending insights, or dynamic offers. AI-powered underwriting for the unbanked. So AI uses alternative data to assess creditworthiness. We already had that in our solely AI slide, which expands access to credit for millions previously left behind. So examples would be digital microloans, or lending based on cash flow patterns for small and medium-sized enterprises. Real-time fraud prevention and anti-money laundering compliance is another example where AI detects anomalies instantly and adapt to new fraud patterns, right? So learning of artificial intelligence is much quicker than a human could interact on such topics, right? Yeah, automated anti-money laundering processes, which are embedded into fintech apps, and then monitor and flag risky behavior in real time, right? Otherwise, you would lag behind time-wise. But yeah, so now you can actually build that in real time, yeah, and follow up in real time. Examples would be transaction monitoring, identity verification, and suspicious activity detection. The key takeaway of the convergence of artificial intelligence and financial technology would be that AI supercharges fintech by making it more personal, especially inclusive and secure, and therefore unlocking better financial outcomes for businesses and individuals alike. If we look at artificial intelligence and its convergence with decentralized finance, AI enhances decentralized systems by adding intelligence, automation, and adaptive decision making. Meaning, for example, smart contract auditing. So, of course, the smart contract, as any code that's being written, is always prone to error. Yeah, sorry.
Please continue.
Was it unintentional, or did you want to say something?
Sorry, please continue. Don't worry.
Oh, okay, perfect. Thanks. Yeah, so of course, smart contracts, as any code that is being written, is prone to error. So artificial intelligence is a huge opportunity to do continuous smart contract or code auditing in general, yeah, which reduces vulnerabilities. So AI scans code at scale to find bugs, exploits, and logic flaws. It can identify hidden risks, which human reviewers might miss and never see. Yeah? It is faster, cheaper, and provides a continuous security monitoring, as I just said. So examples would be code analysis tools, exploit prediction models, or formal verification with AI assistance. Another example, for example, would be, I'm going directly to the third, just because of time constraints. If another example would be autonomous financial agents, right? So everyone nowadays is talking about agentic AI, which autonomous financial agents are, of course, part of. So AI agents can execute strategies, rebalance portfolios, and interact with protocols all automatically. Of course, they have to be prompted right, and it has to be checked that everything is set in place the right way. But once you brought that system up running, then it's completely autonomous. It can operate 24/7 on-chain without human intervention and adapt and learn from market conditions and outcomes. Yeah? So key takeaway here would be artificial intelligence makes decentralized finance more secure, efficient, and autonomous. It helps decentralized systems think, adapt, and optimize in real time. Yeah? The convergence of decentralized finance and financial technology provides a way more user-friendly experience, practical and scalable, and actually also access to a different market, right? The decentralized finance market. For example, we have tokenization of real-world assets, yeah, which is also a very big topic and a growing market. So, for example, as an investor, myself, if I would want to buy, I don't know, the real estate property next to the flat where I live, right? I would need probably $1 million, which I don't have. And tokenization is one way to actually bring liquidity into markets which are by nature illiquid and granting access to people like me, you, whoever, for example, has a few euros, a few hundred, a few thousand euros left, but then can buy actually a share of tokens, which represent the owner rights to a real estate property, instead of buying the whole house, right? I would then have a share of that investment property, of that piece of real estate, but I would not have to buy the whole building just by myself, right? Which is again another point where you see that financial inclusion is being built here, right? Because the vast majority of humankind is not able to, in their 30s or 40s to just buy a house that is worth $1 million or $2 million. If you tokenize real estate, bonds, commodities, equities, for example, it converts physical assets into digital tokens on chain. Yeah, they are tradable. It increases liquidity and fractional ownership and enables 24/7 trading and global access and almost, or in some cases already, atomic settlement, right? So you don't have 1 or 2 or 3 days until a transaction is actually being settled and finalized. But you can have atomic settlement, meaning by the time you press the button that the transaction goes through, more or less at the same time it is being settled. Because of time constraints, I will spare the other examples here, but I guess the picture should be clear. And as I said, everyone who wants to have the slides afterwards can have them and refer back to the topics in case necessary. So DeFi brings openness and efficiency to finance, while fintech brings usability and adoption. If we look at the full convergence of artificial intelligence, fintech, and DeFi, then we have companies here at the right, for example, right? I separated them here in rather crypto-native players, like the lending protocol, lending borrowing protocol, Aave, for example, that I introduced you to, or Ripple. Some of you might have heard of Ripple already. And at the right-hand side to traditional finance and fintech players. So, for example, JP Morgan, the largest bank in the world, they are doing more and more in that intersection here, right? They, for example, have the Onyx blockchain platform. They have their own JPM coin and AI for risk and fraud detection. And just a few days ago, for example, JP Morgan launched a roughly $100 million US money market fund on Ethereum. You can really see how the forces and players collide here. So the traditional financial players, let's say from the legacy financial system, they want to have their chunk, of course, of the new emerging financial technologies. They don't want to get left behind, right? But have to compete with all those very, very innovative and rather young, let's say, startup-ish companies. And if the three forces converge, you can see that users actually are able to own their data. Not everywhere as of today yet, but it is possible that users own their own data, identity, and assets, for example, right? I mean, if I have a self-hosted wallet and I have my Bitcoin or Ethereum and so on the ledger, for example, that I use as a self-hosted wallet, then it's completely self-sovereign, right? No one can actually, if a bank fails, right, or if there would be a security breach or whatever, no one except for me can actually access those assets. The full convergence of infrastructure, intelligence, and the experience, let's say, AI, fintech, DeFi, creates an open, transparent, and verifiable system built on a decentralized infrastructure. AI provides intelligence and personalization, which leads to a seamless experience across platforms and to a global, borderless, and always 24/7, 365 days accessible financial world or ecosystem. So the convergence of artificial intelligence, decentralized finance, and fintech is building a foundation for a more open, intelligent, global, and user-centric financial future. So which opportunities arise from that? Financial inclusion, reducing cost of capital, new business models, new asset classes, and also new careers, right? The field that I am working in today is possible because of that evolution of the past years. 10 years ago, my role would not have been there, right? I'm very sorry for the time constraints, guys. I will make it quick because I have some last 3 or 4 slides to go through with you, so we have enough time for questions. But as I said, always happy also to be approached after the lecture. And if we look at the slide here, more or less, it's also a good summary of the opportunities that I mentioned on the previous slides. So the convergence of artificial intelligence, decentralized finance, and fintech is unlocking new opportunities that were previously impossible, creating a more inclusive, dynamic, and prosperous financial future for everyone, especially for unbanked people. Let me go to the next slide. I guess the opportunities should be very clear. There is a very broad range of opportunities. We did not shed too much light yet on risks and challenges, so I want to emphasize that a bit more, because it is the case with every new technology emerging, especially if such disruptive forces, as the 3 forces that we looked at, converge, then also new risks emerge. So we must navigate innovation with responsibility and foresight, meaning, of course, we need regulation that comes into place, right? I mean, if we just look at the decentralized finance market, for example, blockchain, cryptocurrencies as a broader topic, let's say, then for roughly 15 years, there was more or less no regulation in place anywhere, right? So it's kind of Wild West in a positive and in a negative way, because a lot of stuff is being created. The players who wanted to act in that field, they had free hands. They could kind of try everything out they wanted to do, but at the same time, of course, that brings a lot of risk through scammers and, for example, failed technology and so on. So if you look at different jurisdictions, for example, the US, where we have the Clarity Act right now, people are discussing about. In the European Union, we have the MiCA framework that tries to challenge the risks that are arising, and to actually provide harmonized standards as much as possible. Compliance complexity for cross-border innovation and risk of regulatory arbitrage and fragmented markets, of course, will still remain an issue. So systemic risks and algorithmic failures, that's like a very huge concern, right? Because you can have systemic risks as big as that market grew already. One might be concerned that there could be spillovers if there will be a large downturn again in the crypto markets, as we saw in February, right? Last year in October, there was a big crash, and then in February this year again. And the bigger that market grows, of course, also the higher the chance that spillovers will actually create a systemic risk effect. Data privacy and bias in AI models. That's of course a huge risk and challenge to come by. And the digital divide. Who gets left behind? Hopefully no one. Sadly, that is always the case to some extent. But especially meaning every one of us, let's say as kind of a community who is interested in shaping the new financial infrastructure, a new financial future, has to make sure that also rails are put in place where people are not getting left behind, right? So reasons for that could be limited internet access and device affordability, for example, right? I mean, compared to the legacy financial system, the entry barrier with just having a smartphone and internet to gain access to the financial market is very low, compared to previous years. But still, of course, it can be an entry barrier. The biggest probably low digital literacy and financial literacy. So we really have to make sure that going forward, there will also be enough education opportunities, right? For example, what we are doing here right now, what UNAM is doing in the African Blockchain Center is so important to actually bring education to the people about those topics. Because let's be honest, for example, my brother is a handyman. He's doing great work. I have two left hands for that, so I basically cannot really build anything with my own hands. But he's amazing in doing that, but he has no clue of what I am doing. And he kind of he knows how to write the word blockchain, and that's it basically. So I completely understand and feel how far away such a topic must be for a handyman or an artist, whoever is not working in such an area in their daily lives, and they don't have, for example, also the time to actually focus on those new emerging technologies. So to make it short, guys, I'm very happy to take questions. Also, if you within the Q&A session, if you want to have a look at single slides, just shoot. Because, for example, here the regulatory horizon, it's a very packed slide. I don't want to go too much over time to leave room for questions. So I hope that is sufficient for now. Point out slides if you want to go there in the Q&A session. For example, that one, if you want to learn more about the regulatory horizon, if you have questions there. But for now, I want to close with a little summary to emphasize that the best way to predict the future of finance is to help create it, actually. So it's a huge chance that every one of us has today through those emerging forces. The entry barrier is still there, but I would take the stance that it never has been lower. The call to action definitely is how we can find mass adoption, bring in secure frameworks, and build financial literacy, especially for people who do not really have them yet, to actually participate in that market and make use of that their chance. Yeah, the future of finance will definitely not be defined by technology alone, but it defines how we use it and to expand human potential and yeah, create shared prosperity for all in the long run. Here's a slide for all of you afterwards, yeah, just to provide the sources and data that are used as references. And yeah, I want to thank you all for listening, for your attention. As I said, here's also my email on the last slide. So very happy to being approached by all of you afterwards in case there should be follow-up questions, even though that would be the case in a few days or weeks. And yeah, that would be it from my side for now. Thanks again for the opportunity and happy to take questions now.
Thank you again, Christopher. I think it's been a very awesome moment learning about AI, DeFi, and also the financial inclusion. I try right now that we need to join hands to rewrite this conversation, especially looking at on the continent. I think while we're discussing on, many folks has been able to drop their questions, and also will also allow other folks to unmute themselves to also ask them questions directly as well. So, colleagues, if you can raise your hand, I've seen Susan Olo. You can please go ahead and ask a question. Then probably will ask to also raise their hand so they can able to ask their question. Thank you. Over to you, Susan.
Hello, Susan.
If you're speaking.
Thanks, Christopher. I really appreciate your presentation. My question is, it's relating to the risk. One of your slide I saw there, I was just asking, we're going to go online, digital, trading with our cryptocurrencies and with all the system. I just saw all the slides and it's very complicated, but I know that if we go step by step, that's what we are doing with Trust Poly. We'll get grasp of this decentralized financing system. My question is, when we go like 100% decentralized online, is there a risk of any government of any country will tax us for our finance or put in a regulations that will tie us up somehow? That's my question.
Okay. Yeah. Thanks for the question, Susan. So meaning, if I understood you correctly, if there would be ways to actually tax you if your money is on chain or your value. Did I get that correctly?
Yes.
Okay, yeah. Let's say there will always be workarounds, probably. The question is just what will be legal or illegal in your jurisdiction then, right? Of course, it always depends on the protocol that you look at. For example, if you look at the Bitcoin protocol, it's not anonymous. That's a misconception. It's pseudonymous, right? So you have the address, my address, for example, and you have your Bitcoin wallet address, Susan. And if I send you, I don't know, 0.1 Bitcoin there, then everyone can see that 0.1 Bitcoin was being sent from the address with strings and letters. Letters and numbers, was sent from one address to the other address, right? Of course, it does not say Christopher Ans or Susan Hulo, but the pseudonym is the address, kind of, right? So actually, everything is visible. So first, you would have to distinguish between a system where you can actually follow all the transactions through how do you say that, to Yeah, through blockchain forensics. Yeah, so there are real blockchain forensics now who are actually doing nothing else than following fraudulent transactions, for example, right? Which is quite easy, let's say, on the Bitcoin blockchain, for example, because as I said, it's pseudonymous, not anonymous. The question is then if they can link the wallet address of Susan Hulo back to Susan Hulo, actually, yeah, and then everything would be visible. But there are also blockchain networks, for example, Monero, who have higher privacy features, yeah, incorporated. So to trace back transactions there is a lot harder. And then also, sorry for being so technical then, but there are also so-called mixers who actually mix around transactions, break them into smaller ones, send them through multiple wallet addresses to make it very, very hard to trace back transactions and funds. The thing is, it very much depends on the legislator. At least I would say that. Of course, if people come up with new, brilliant, innovative ideas, then there will always be workarounds, right? But if you, let's say, for example, I don't know that yet, Susan, but if we just assume that you live in Namibia and Namibia publishes a legal framework that is binding from 2027 onwards, right? And I don't know, let's say buying and holding Bitcoin or other digital assets or stable coins would be prohibited from usage, then it would always be the question of, yeah, technically it would still be possible that you could find your workarounds to not get taxed, but I'm pretty sure and would take the stance here that the legislators, it's a question of time until they will implement on large scale frameworks which make sure that the state can collect their taxes, right? So I to bring it down and to sum it up, I think the days are more or less over to actually not pay taxes in the long run, right? At least we already see that in Germany and in the European Union right now. There was it's called DAC 8 for everyone who wants to look it up. DAC 8, DAC 8, which is a regulatory framework that was embedded by the European Union and is active as of the beginning of this year, where actually all the cryptocurrency exchanges and providers in the space are obliged by law to share information with the different European governments, right? With the German governments, the France government, to make it harder to evade taxes. I hope that sums it up, Susan. Otherwise, if you have a follow-up question on that, please shoot.
Yeah, thank you. We are learning, and as the process takes its time, we will learn as we go along. And also the government will maybe become part of this decentralized system, or we'll see as time goes. Thank you so much, Christopher.
Sure, you're welcome, Susan. Yeah, but I'm with you there. It will be also there, yeah, like the convergence of the three disruptive forces that we looked at. Also, the legacy financial system and the new decentralized financial system. It's already happening, yeah, that they collide and they converge somehow, and that will also be the case with the different states and jurisdictions, right? That we will see in the future, but it will be definitely a coexistence with legal frameworks put into place, let's say. Yeah.
Okay, I think there's some questions in the chat box before we ask. So Johnny was asking if you can give a practical, successful example of convergence of DeFi, AI, and fintech.
Of AI, DeFi, can you give a practical, successful example? Yes, 1 second. Let me jump back to that slide. Yes, yeah. Yeah, for example, I hope that that will be sufficient to you, Johnny. But for example, PayPal is a very good example. If you remember, maybe let me share the slide that will make it easier. You should all be able. Yes. See my slide again now, right? So I think a very nice example is PayPal, which is a fintech company from the, let's say, old days or the first days of fintech, kind of, right? Early 2000s. So you have a fintech player, which then throughout the years adopts blockchain technology, DeFi, and AI-driven services. Yeah. So you might have heard that PayPal launched their own stablecoin. I would have to check on CoinMarketCap now, but I think their PayYUSD has a market cap roughly around 2 or 3 billion. So rather small, yeah, but they're catching up. So we have a fintech player, PayPal, which adopts or launches their own stablecoin, PYUSD, and also incorporates AI-driven fraud prevention within their application, yeah, within their PayPal app. So basically, there you have all three disruptive forces converging. Yeah. Or Revolut would be another good example. Or I don't know if Nubank is also a big player in the African market. I know they are in the Latin American one. But yeah.
All right, thank you. So anyone else with the questions? Dr. Gavi, you can please, anyone unmute yourself so that we can ask questions before we go.
Yeah, no, thank you very much. I just joined in now. Unfortunately, I was really trapped up into something else. I couldn't make it up on time. But maybe just out of the blues, I traditionally really have a question related to, and I'm really asking this without knowing exactly if it was covered in the presentation or not. My apologies in advance.
No worries.
The landscape of adoption of integrated fintech, AI, and blockchain-related payment rails in different geographical areas of the world. I don't know how that landscape actually looks like. I'm asking this from a painful experience in Namibia, where the situation currently is that we are a technology taker and not a technology creator or technology maker. Example, you have PayPal, you have just mentioned, which is an old fintech company. I have a PayPal account in Namibia. I can make payments wherever I want in the world. I cannot receive payments through PayPal because of the regimentation of the financial policy systems. I can create employment opportunities on YouTube and digital content development in different platforms, but I would not receive any single payment because I won't be able to receive payments through such kind of payment rails. So my question is, for those countries that have really moved a bit ahead in terms of an integrated payment rail system, integrating AI, fintech, and who are in the forefront, and for those that are at the lagging behind, what are the typical disincentives or stumbling blocks for countries like Namibia that are not seeming to be ticking in the right direction and warming up to these technologies?
May I ask first, Gervi, why it is not possible for you to receive money via PayPal, for example?
The central bank doesn't allow that to happen.
Okay.
Yeah.
So
I think it's a protective measure to protect the local fiat ecosystem.
Okay, yeah. And that would be exactly one part of the answer, that it's due to the legal jurisdiction, more or less, right? That then it is not possible via PayPal for you to receive money. But for example, if you because the state of Namibia in this case, does not want that to happen for various reasons. What you could do, for example, with your example that you brought up, that you distribute work, for example, to someone else in the world, right? YouTube content, that should be created, and then or you created that YouTube content, right? And you want to get paid by someone, or vice versa, someone else sitting in, I don't know, in France. Then you could find your workaround, not using PayPal, right? As of today, but using stable coins, USDC, for example. I mean, there are also PYUSD, the PayPal stablecoin that I talked about. That's PayPal native, so that might not be accessible in your country then. But USDC, for example, or there are also fully decentralized stablecoins, such as DAI, DAI. You could use them then, for example.
Right. So
I think
thank you.
I'll check up on them.
Yes,
Pardon?
thank you very much, Dr. Galvin. Thank you very much, Christopher. I think we'll be having a very awesome time today. I guess if we leave the Q&A ongoing, we might not finish in the next couple of hours. There's a lot of interesting questions coming up here today. Thank everyone for joining. And much more, I want to thank our coordinator, Professor Ngulu, for making this to happen from the University of Namibia, our Masters of Science of Blockchain Technology coordinator from the University of Namibia is also on the call with us here today. Thanking him for also allowing us to collaborate with the Frankfurt Blockchain Center for this public lecture that we're having here today. Thank you very much again. We'll be having many more of this public lecture throughout the year as well. I will make sure we'll announce it earlier enough so that we can all sign up. The inspiration for today will be shared for every one of us today. On our emails, you can also make reference to it, and the emails of Christopher will be also on the emails as on the presentation as well, so they can able to follow up with further questions afterward. Thank you again for joining us today. And I don't know if Christopher, you have any last word before we go on today's meeting.
Yeah, just thank you very much, Coyote. Also, again, to everybody for listening and for the opportunity. And as Mr. Barbarinda already said, for all of you who were not able to ask your questions yet, approach me via email. Happy to take them. Yeah. And if you don't mind, Mr. Barbarinde, do you have a minute to stay in the Zoom link afterwards? Perfect. Nice.
Thank you, everyone. Bye-bye.
Thanks, everybody.
Yes.
Yes.
Bye.
Thank you.